Good day, Junior Tikkies. I'm Mrs. Brumacombe, and we're looking at adjustments where the focus is going to be on salaries and wages. This is work covered in grade 10, so we're just going to revise it a little bit. Always remember, the gross salary is an expense to the business, minus deductions, which will go to the fund account, which is a liability. Examples: SARS pay-as-you-earn, medical aid, pension fund, UIF, etc. equals the net salary. The net salary is indicated in my creditors for salaries and wages, which is a liability to the business. Now, any contributions from the business is added to the fund account. That contributions is an expense. The business will never contribute towards the SARS pay-as-you-earn. That is your employee's responsibility. The types of adjustments that you can expect in grade 12 is where an employee's salary is omitted. An employee's salary is omitted, but there was also a salary percentage increase. The employee received an increase. The salary was recorded but without the increase. An employee retired and the bookkeeper added the salary. So these are the types of adjustments you can expect in grade 12. If I look at if a salary is omitted, it means we need to add it. The gross salary is always debited. All deductions is credited and it will go to the fund account. If I look at contributions, all contributions will then be debited. If it's omitted, we need to add it. The fund account is going to be credited. If I take the gross minus deductions, it equals the net salary, which will go into creditors for salary. And make sure you understand the effect it will have on the accounting equation. If we look at if a retired employee and his salary was included, it means it should be taken out. It doesn't form part of my expense for this accounting period. So this means that the gross salary, the salaries and wages account, the expense account will be credited and the fund account will be debited. If we look at contributions, the contributions account will be credited because my expense decreased, and the fund account will be debited because my liabilities will decrease. So contributions credited, liabilities, the fund account debited. The net salary, which appears in the creditors for salaries, will be debited. We don't owe that employee anymore. Be aware, there's another type of adjustment where an employee took something from the business and we're going to deduct it from his salary. Activity 24. Show the effect on the accounting equation and indicate how it will appear in your financial statement. An employee's salary was not processed on 28th February 2021. His gross salary amounted to 27,400. So the gross salary means we need to add it to our salaries. So salaries is debited. Pay as you earn, 5,000, it was given to you, will be credited. We owe that money to SARS. The medical aid, 1,500 is deducted. Again, salaries would have been debited. Medical aid fund is credited with 1,500. The pension fund, 6% of the gross salary, which means I need to take 27,400 times 6%, and that equals 1,644. UIF is 1% also of the gross salary, so that means 27,400 times 1%. So if I take the gross salary minus all the deductions, so take everything that was credited and subtract it from the gross salary, the creditors for salary, my net salary, amounts to 18,982. Effect on the accounting equation: owner's equity minus. Every time our expense increase, it will have a negative effect. This is if we show each one separately. If I add it together, it should equal the 27,400, which is my gross salary. All the liabilities is money owed, therefore plus. Nothing happened with my assets. To show the contributions, if we start with the medical aid, 80% of the employee's contribution, it means we have to take 1,500 times 80%. That equals 1,200. It's always added to the fund account. Pension fund is on a rand for rand basis, so whatever was deducted will be contributed. Pension fund is credited. Pension fund contribution is debited. UIF, 1% of the gross salary, so it's the same as which is deducted. So if 1% was deducted, 1% is contributed the same amount, UIF is credited, and UIF contributions will be debited. Effect on the accounting equation: all contributions is an expense, which means if our expense increase, it will have a negative effect on the owner's equity. It is added to the fund account, which is a liability, so my liabilities will plus. So we need to show each one for the medical aid, the pension fund, and the UIF. If I look at the skills development levy, the business never deducts this from the employee's salary, but we always contribute towards it. This means skills development levy fund, which is a liability, must be opened, and skills development levy contribution. The fund account is credited because we owe that money 1% of the gross salary, which means 27,400 times 1%. Skills development levy contribution will be debited. Effect on the accounting equation: owner's equity minus, liabilities plus. Completing the financial statements. If I look at the gross salary, the salaries and wages, it will always appear in my income statement. So from the pre-adjustment trial balance, 580,000 plus 27,400 equals my new expense updated total, 607,400. SARS pay as you earn will form part of my balance sheet. Trade and other payables, 5,000. The medical aid contribution and the medical aid fund. The total for the medical aid fund was 2,700. It consists out of the deduction plus the contribution. And in my income statement from the pre-adjustment trial balance, 55,000 plus 1,200. New total, 56,200. Pension fund consists out of deduction plus contribution. So in my trade and other payables, 3,288. And in my income statement, pension fund contribution from the pre-adjustment trial balance, 72,000 plus the contribution which was omitted, 1,644 equals 73,644. UIF. The UIF consists out of deduction plus the contribution, so the total owed to the fund account in your trade and other payables, 548. In my income statement, the contribution from the pre-adjustment trial balance 5,800 plus 274 equals 6,074. Creditors for salaries, my net salary in trade and other payables 18,982. And then we have the skills development levy. In my income statement, from the pre-adjustment trial balance 5,800 plus 275, so my new total 6,074. In my trade and other payables in my balance sheet, the skills development fund, we owe 274. Looking at activity 25. An employee who retired was included in the salaries journal for February 2021. So activity 24, we focused on where an employee's salary was omitted, which means we needed to add it. Now we're going to look at if an employee retired and he was included. This means we need to take it out. So starting with the gross salary, it's unknown. An employee retired, they didn't provide me with the gross salary. They provided me with the net salary. So how do I approach this? This is what you can expect grade 12 level. The net salary goes into creditors for salaries, 13,320. If I look at the total deductions, it equals 26%. The gross is always equal to 100, which means 100 minus 26 equals 74%, which is my net salary. So if I want to know what is the gross salary, we can take 13,320 times 100 divided by 74. Because the net salary was given and that equals 74%. So the gross salary is 18,000. So salaries and wages is credited with 18,000. My pay as you earn, if I want to calculate my pay as you earn, you've got now two options. We're going to look at another option later on. If I want to calculate the 20%, the pay as you earn, we say 20 divided by 74. So my pay as you earn amounts to 3,600. SARS pay as you earn must be debited. Pension fund equals 5% of the gross salary. So now I simply take 5 divided by 74. 900 must be deducted. So my pension fund is going to be debited. UIF is 1% of the gross. So if I want to calculate the 1%, we can take 1 divided by 74. And that equals 180 Rand. So the UIF will be debited. Once you calculated the gross, the 100%, which is equal to 18,000, with all of the calculations for SARS, pension fund, UIF, you could have then said 18,000 times 20% times 5% times 1%. To show the effect on the accounting equation, because our expense is going to decrease, my owner's equity will increase. It will have a positive effect. We owe those fund accounts less money. We owe the employee less money. That's why our liabilities will decrease. If I add everything up in owner's equity, the 3,600 plus 900 plus 180 plus 13,320, it should equal the gross salary 18,000. If I'm looking at the contributions, all expenses relating to salaries are recorded in the salaries and wages account. So the pension fund, we contribute on a rand for rand basis, and the UIF is 1% of the gross. It means that pension fund, if 900 was deducted, 900 is contributed, which we owe less to the fund account. So pension fund debited, salaries and wages credited. The UIF, if 180 was deducted, 180 is contributed. We owe 180 less to the UIF, so UIF debited, salaries and wages credited. The effect on the accounting equation: because our expense decrease, it will have a positive effect on the owner's equity. Liabilities, we owe less. Looking at completing it on my financial statements, if I start with the gross salary, salaries and wages, the total brought forward 96,000 minus 18,000 minus 900 minus 180 equals 76,920, and that's the amount that will appear in your income statement. In trade and other payables, SARS pay as you earn, 22,000 minus 3,600 equals 18,400. The pension fund, 23,700 minus 900 minus 900 equals 21,900. UIF, the balance brought down, 4,050 minus 180 equals 3,690. Creditors for salaries, we have a balance brought down from the pre-adjustment 42,000 minus the 13,320 equals 28,680. This concludes salaries and wages. Make sure that you study it and you revise the work. Next, we're going to look at trade discount. I want to leave you with this quote. Note to yourself, winners aren't who never fail, but people who never quit. Thank you very much. I hope you have a wonderful day.